Do you think that this rotation is here to stay?
Well, it's a great question, and I think it. I gave a talk a few years ago, and it was called "Is Value Investing Dead?" And my answer was yes, no, maybe, and I don't care. And really, it depends how you define value investing. But your question really comes from, if you look at the last 5 years, look at the Russell Value Index and the Russell Growth. Growth beats value by 11 points a year for the last 5 years, 16 points a year the last 3 years. It's beating it by 33 points this year. So it's a good question if you define value like low price book, low price sales investing, and we define it differently.
Based on that definition, do you think that your style of investing is poised to prosper?
Sure. So our definition of value investing is figure out what something's worth, pay a lot less, and of course, that's pretty obvious, but we're looking at cash flows. No private equity firm goes buys a business because it's selling at low price to book, low price sales. They're valuing the whole business, and they care about cash flows and how much those cash flows are going to grow. Warren Buffett would always say, growth and value are tied at the hip. Growth is a part of value. So, the traditional metrics that have worked over time for value may or may not work going forward. It doesn't really matter. It's still based on forward cash flows.
And so, all right, forward cash flows, what, are you making an assumption of terminal value at some point then, Joel, and sort of discounting that back?
Well, basically, the way you want to value a business is look at normalized earnings a few years out. At least that's the way we look at it. Normalized earnings a few years out, and then how much of those earnings are going to grow over time. And it's has to do with interest rates. What are your other choices? It has to do with relative values versus what are your other chances. It has to do with the risks of those cash flows actually coming. And so, that's what makes it a horse race.
But do you feel like you've been banging your head against the wall for a few years here as you watch, traditional value underperform? So you gave us those numbers. They're stunning.
Sure. Well, those numbers are actually higher than the 5 years before the internet bubble. Growth has actually beaten value, traditional growth. But the real answer to the question when I gave that talk was yes, no, maybe, I don't care, is really I don't care. Traditional values, like I said, no private equity firm will go buy a business because it's low price book, low price sales. What's happened in the past and why those have worked is that those kind of metrics, if you buy companies selling close to the historic cost of their assets, what that really means is that, no one's paying much of a premium for the actual business. So if you buy a bucket of companies that have those kind of attributes, you tend to get more than your fair share of companies that are out of favor. But that's a correlation. Causation would be future cash flows. How do you value a business? And we only care about causation, not things that have correlated with good returns in the past.
Shepard Smith here. Thanks for watching CNBC on YouTube.